This is Bazaar Morning Call, broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. It's a Wednesday morning coming out of a holiday, midweek holiday, early half of the week holiday. I'm Prashant, with me my colleague Sonia and Nigel. Guys, hi, good morning.
Good morning. Hi, good morning. I don't know about you guys, but I love midweek holidays. You know, I like it more than a long weekend because you get that feeling that you're in sort of a weekend mode, and then you come back. And there are just 3 more days.
Well, I agree. Even I thoroughly enjoyed this Tuesday. It was amazing. It was a late Monday night and had a good time. Now back for the next 3 sessions. And I think today's going to be an important one, given the kind of cues that we have stacked up for us.
Oh, yeah, absolutely. I mean, so let's just kick things off with exactly that in terms of what you need to know, because we'll be reacting to 2 days worth of changes, right? There is Monday's close and then yesterday's close as well. So let's get the ball rolling. So, the last two-day change for the U.S. markets is kind of flattish. It's not a pleasing outcome overall, and I'll tell you why. Because the Nasdaq, while it is done not very much, is down about 0.25% or so. Over the last 2 days, the 10-year is up about 3 basis points. Last night it went up 6, but the previous day it was down 3. So the net change is 3 basis points, but higher. And you got oil prices, which are also up another near 1% over the last 2 sessions. So this is, where the outcome is at. Oil near 95, dollar index above 105. And of course, on Monday, that is the last trading session, the rupee took notice. The rupee is now near all-time lows against the USD. And this is never a good sign for stock markets as well. The big reason, of course, is, terms of trade because of the large amount of oil imports and the negative impact that India sees every time oil sees a very sharp uptick. Will stock markets also sit up and take notice in a big way? I think that is the real question. To add to all of that, there is, of course, the Fed decision later today as well. That is expected to be a non-event in the sense that the Fed is expected to be on hold, hold, skip, whatever, but they're not expected to hike or anything, or, of course, and they're going to. The expectation is that they will leave the dot plots, basically where the Fed members see rates going forward, leave that unchanged, which means that there perhaps will be one more rate hike sometime in 2023. So, the outcome is not expected to be different from what is already kind of in the price out there. No surprises expected. So, I think, of course, we'll hear from Fed Chair Powell, and there can always be surprises, etc. But I think the big one for India is, of course, where oil is at, and that is now knocking at $95 a barrel. Okay, you got negative closes on both the Nifty and the Bank Nifty on Monday. That is the last trading session. Perhaps we get a slightly deeper correction, but we will only be able to confirm that once the Nifty sees a close below 20,051. That's a near-term, exponential moving average, the nearest. So that's 20,051. We left off at about 2133. Support comes in at the lows of 19,914, in terms of the next target. And on the Bank Nifty, again, slightly deeper pullback is possible if that index closes below 45,797. The close is 45,979. So about 200 points away from there. And then the target or the support or whatever you want to call it, if this does materialize, becomes 45,299 or so. So that's some distance, not some distance away, it's a couple of percentage points away. But these are very near-term levels that if you want to look to trade. Now, just one word on the Nifty PSU Bank Index. By the way, the traded volumes on the Nifty PSU Bank Index were some of the highest we've seen in a very long time. That is Monday's session. Now, it can be interpreted in all kinds of ways. At the margin, I mean, if you look at very recent history, which is you go back and see the top in 2021 or, the one after that, this is not really a good sign. The very large amount of volume, not value traded, but volumes. And by the way, the Nifty PSU Bank also sold off in the last 60 minutes of trade on Monday. We saw about a 1.5% pullback. The index still ended about 2.9% higher. So that's, I think, another one to watch out for as we go forward. Stocks have done very well. Fundamentals are looking okay, all right. But I think we need to pay attention to the price action as well. The GIFT Nifty is indicating an open right around some of these levels that I put out, which is about 20,051. The GIFT Nifty is indicating a start around the 20,080 odd levels. Soni.
Okay, so that is a big cut that we're looking at this morning, right? Almost a 100-point cut on the Nifty, given the kind of global cues that we have. But I think the big focus area today will be on the Bank Nifty and what's been happening with HDFC Bank. So that is, undoubtedly going to be the big headline of the day. Now, HDFC Bank could be under pressure today post the analyst meet takeaways, where the management did say that their net interest margins could decline to about 3.7 to 3.8% on a pro forma basis from the 4.1% that was recorded in Q1. They also talked about how, the net worth of the company because of the merger will be impacted by 5%. So that will directly have a bearing on the market today. And in that context, if you look at it, HDFC Bank has a contribution of around 14% to the Nifty on the whole. So the HDFC Bank, the Bank Nifty as well could drag down, and hence that will be the big focus area for the market today. Apart from that, FIs continue to sell. So FIs sold about 1,230 crores in the cash markets on Monday, and DIs bought about 550 crores. And then again, we have a lot of other, headwinds for our market, whether it's Brent at a 10-month high, whether it's US markets that were down for 2 days running, right? The Dow was down 100 points overnight and 200 points on Monday. So 2 days running, the US markets has been under pressure, and our own markets will definitely play catch up there. But on the Fed rate decision later today, I think all eyes will be more on the dot plot rather than the rate decision itself, which is expected to be a pause. So the dot plot will provide any indications of what happens in the November policy, which is the next policy. So the Nifty has been holding on to the 20,100, but today the pressure comes in from HDFC Bank, and I think that is something that the market will react to, and then we'll take it from there.
Well, that's right. So then we'll wait by for the Fed's decision later tonight, and the bulls will be hoping there is some signs of some kind of dovishness, because this time around there's nothing expected, but the commentary is going to be eyed out there. As you said, HDFC Bank, that's the crucial one today. And in Monday's trading session, that ended at the low point of the day. And as we've been saying, that's been a relative underperformer. Now, whether you're looking at the return ratios or you're looking at the commentary on asset quality, or the street is doubting whether or not they can grow on such a large base. So all those cues, well, they're stacked against HDFC Bank stock. But the point is that valuation-wise as well, it's trading at the lower end, which could support. Short point is it starts off on the back foot, and then from there it holds the key for today's trading session, given its weight on the Nifty as well as the Nifty Bank. And today, by the way, is the Nifty Bank weekly expiry as well that will play out. So that's going to be important to watch out for. At the start, reaction to HDFC Bank, and towards the end of the session, you'll want to look at the Nifty Bank and how exactly traders want to position themselves ahead of the big event that's later tonight. Well, moving to the cues that are coming in there, on a closing basis, today, though they were likely to see a pullback at the start, the bulls will want to defend that 20,040, 20,050 odd mark. So that's a crucial marker on the downside, and we could start very well close to that. On Monday's trading session, there was some unwinding of long positions that we saw, and that perfectly ties in with what the FIs did. They lightened their long positions as well, though they continue to remain net long with their positioning at around 65%. I was going through the Nifty options data, and you have the highest open interest at the 20,200 call on the upside, and on the downside at the 20,100 put. The 20,100 put, by the way, the premium was roughly around 50-60 rupees or thereabouts. So that's what's giving you your support zone. 20,040 on a closing basis, you want to defend that. But given that on the upside, you have a huge amount of open interest at 20,200, well, the bears are positioning themselves that we don't get past the 20,300 mark. But since today's Nifty Bank weekly expiry as well, we did see signs of writing at the 46,100 call as well as the 46,200 call. And that's why the range that you're looking at on the upside, resistance will come in at the recent highs, which is in that vicinity of around 46,350 odd. But on the downside, the 46,000 put has the highest open interest on the put side. So you'll want to defend that 45,700 odd on a closing basis. GIFT Nifty suggests a pullback. HDFC Bank, that's the one that holds the key for me. How much of the bad news is in the price? Will that dip be bought into? Because the positioning was weakish even on Monday's trading session.
Okay, so we'll keep an eye out on that. On one hand, you have PSU banks that are rallying. On the other hand, private banks like HDFC Bank are saying that because of the merger, both their net interest margins and their net worth could be impacted. So that's going to be a drag on the markets today. But let's do one thing. Let's get you some market opinion on how to approach the day. Mahesh Nandurkar of Jefferies says their meetings in Delhi with ministers, bureaucrats and experts suggest that while political continuity in 2024 is likely, fiscal pressures are building up with oil prices rising. Potential reallocation towards social spending might drive incremental pressure on PSU divestments. They further reduced the model portfolio beta for tactical reasons, keeping in mind yields and CPI data. Jefferies has trimmed their weight on property, mid-cap industrial, staples, and has added Bharti Airtel and their cash position.
Well, let's get you some money market views as well. We've got on the rupee, Kunal Sudani of Shinhan Bank, who's weighs in, says market participants are awaiting Federal Reserve's decision and updated economic projections for directional cues. US Treasury bond yields are climbing ahead of Fed's decision, while dollar index is staying above the 105 mark, still awaiting to test the 6-month high of 105.43. Oil prices remain firm for the rupee. 83 to a dollar acts as a support, while 83.50 to a dollar is the resistance.
All right, and on the bonds, Neeraj Gambhir of Axis Bank says bond yields rallied on better than expected inflation print and chatter of India's inclusion in global bond indices. However, weak auction demand led to a retracement. Going forward, the market would take cues from the US and Japan central bank meetings and would continue to assess the possibility of India's inclusion in global bond indices. He expects the benchmark 10-year yield to trade in a range of 7.12 to 7.22% for the week.
Well, we have a lot of stock-specific action to track for you. We get to that in just a bit in our special Top 10 segment. We look at Biocon, Blue Star, Amber, GMR Airports, Ashoka Buildcon, Real Kashyap, NBCC, and Zydus Life Sciences. All of them on the back of positive news flow. While on the flip side, you'll have two notable nifty names that could be under some pressure, namely HDFC Bank and Tata Motors.